I have Scott Cisneros on the podcast today. Scott is a top producing SBA BDO in California, and California is one of those crazy cutthroat markets. So stick around to find out how Scott's getting it done. Hey, Scott, good to see you.
You too, Ray. How are you?
I'm doing good, man. So I actually haven't done something like this before where we don't know each other at all. And
Right.
I asked you on this podcast because you post consistently on LinkedIn about your closings. And so there's no pre-interview here. I'm going in blind, which is kind of exciting. Okay. But the whole point of the podcast is to just kind of share best practices with like our SBA community, our SBA BDO community throughout the country. So I just gotta vet you, man. I gotta make sure you're a top guy. All right. So how many loans have you closed this year, roughly? You don't have to give me an exact number.
I'm right around 20, 25.
Okay, 2025. And I looked, and your guys' average loan is around 1.5 million, right?
Correct.
Yeah. So you guys can do the math. That is higher volume than most BDOs do. So we've got the right guy. So I'm glad we established that. So if you're interested to learn more about how Scott is putting up these types of numbers, stick around. But I want to start at the beginning. Okay. So how did you get into SBA?
I've been in banking since 1991, but on the retail side. So I was in branches, working my way up, branch manager, regional manager, and I always liked the sales aspect of it more than the operations aspect of it. So my teams always did very, very well on the sales side, and we a little bit struggled when it came to compliance and all of that because that just wasn't my focus. And I was working for Rabobank at the time, and they were doing some, basically some changes to the organization. And I happened to sit next to the regional manager, my peer for business banking. And he's like, hey, why don't you come over and work for me? And same money, same everything, bonus potential is way better, and come switch sides and get out of retail and come business banking. And so that was kind of my transition over to the sales side of it full time. Did that for a number of years, and then was just looking for a change. Things were not there, and went over and started interviewing for SBA.
Scott, did you ever do an SBA loan up until that point when you wanted to switch over to like be a full-time SBA person?
Nope.
So no experience with SBA. Why do you want to, what made you even decide to do that?
I had gone and actually talked to a couple of SBA guys, and they were just talking about how great it was. And you had your this, you were free, you weren't tied to a branch anymore. And I think at the time the guy was hitting me up for leads and didn't realize that I was more interviewing him, thinking about I wanted to go into the SBA world. And so when I went my first job, and this was about 7 years ago, I had never done a 7A loan in my life. I didn't know what a 7A loan was. And I remember my soon-to-be boss said, do you think you can do it? And I think I can do it. Never realizing I was going into a full-on 7A shop, had never done a 7A loan in my life. And he hired me. And I, years later, reached back out to him and said, hey, why did you hire me? I had never done a 7A loan in my life. I didn't even know what one was. And he's like, you just had something about you that I thought you'd be able to do it. And I just remember those first couple of months just diving into the SOP, just studying, trying to figure out, and then asking my boss a million questions. What about this? What about this? What do we do this? How do we look at this? How do we do this? And just peppering him with questions, and then reaching out to brokers because I realized, hey, we're these deals are going to come from brokers. We're doing business acquisition. What does this look like? And as the deals would come in, just learning, and I kind of felt like that probably that first year just learning exponentially about the product, the process, what do we like, what do we not like, and kind of went from there.
Will you tell us your boss's name that gave you your first 7A job?
Yeah, Joe Smith.
Joe Smith. And the reason I wanted you to say his name, because folks like that deserve so much credit, because they're hiring new blood into the industry and they're able to identify someone based on, and he was right, because you're crushing it. And I was at the conference last week with a guy who did the same thing for me, Tom Zernick. And I had been out of college for 2 years and never done a 7A loan, and also didn't even know how to do my own taxes. And I was like figuring out life still. And he gave me a shot, and I asked him the same question. How did you know that I was able to do this? And he had a similar answer. So that is key. That is just one of those skills that not everyone has. Everyone seems to always just say, hey, what'd you do last year? Do you have 3 to 5 years of experience? Are you a $8 to $12 million a year producer? Well, guess what? That's fine. But if you want to find the 30, 40, $50 million producer, you need to have some talent like Joe Smith did. That's how you got into SBA. Now you've been at this shop for how long? 2.5 years? This is Union Bank.
Yeah, Union Bank, about 2.5 years.
Okay. Tell me about the shop. How many BDOs? Is it in-house underwriting? Is it a preferred lender?
Preferred lender, we've got 13 BDOs at this point. In-house underwriting, our main headquarters is down in San Diego, and so everything primarily runs through San Diego or LA. That's the main genesis for Union Bank.
Right. Okay. Yeah, you're a West Coast guy. So when you were looking to go there, you went there with 7A experience.
Correct.
Why did you choose to go there 2.5 years ago?
I was still with Joe at that point at a little bank called Exchange Bank, and they were very geographically focused. So I'm lending out of Northern California, and they were a Santa Rosa bank. They didn't stretch much past Santa Rosa and Sacramento, and so you started going about 100 miles north or 100 miles south. They started getting uncomfortable with the deals, and I started having to pass on more and more deals. They were good deals, but they're like, well, it's in Reno and that's too far away, or it's in Bakersfield that we consider that Southern California, and no one in California considers Bakersfield Southern California, but this bank did, and that was one of the hardest things I've ever had to do. The job was good. I was a top producer over at Exchange Bank, but I wanted to do more, and interviewed at Union Bank, and they were lending in Washington, Oregon, California, Arizona, and Nevada. And I thought, well, if I can just have a bigger footprint, this will just make my job that much easier. And so that was the main reason to go over to Union Bank, where I'm at now.
Has your production increased since you did that?
Oh, dramatically. I mean, I was that, $8 to $10 million guy at Exchange Bank. And this year, if I book everything that's already approved and it's in my pipeline, I'll be 40 to 50 million. And so, I mean, it's done exactly what I wanted it to do, where I don't have to pass on a deal because it's in LA. I don't have to pass on a deal because it's in Oregon. We're doing all these deals.
Nice. So what do you think the bank's competitive edge in the market is?
Our pricing is good. I think that probably initially gets gets me into the conversation. We have an appetite for business acquisition. We like it, so it's not like it's a bank who's we're not sure whether we like this. We're dabbling in it. No, they're full on into business acquisition. As well as we can offer fixed rates. So there's not many banks out there that are doing the fixed rate on the 10-year product for the straight business acquisition. And then my rates even get even better if we can throw in real estate into the deal. So 51% of the transaction is real estate. Then we're doing fixed rate on the 25-year term, great interest rate. And it's just hard to beat at that point.
Yeah, this is the type of pricing you would expect to find at a large bank, like a Wells Fargo type. You're doing it as how big's the bank?
God, to be honest with you, I'm not sure.
So it's smaller than Wells Fargo, fair to say.
Oh, yeah. I mean, West Coast Bank, I I think our advantage is our parent company is MUFG, which is Mitsubishi. So our cost of
Oh,
funds is pretty low in for comparison, as well as because we operate primarily in the LA market. It's a very, very competitive market. So my pricing up in Northern California, although the market's not that competitive, my pricing is still based on LA pricing. And so,
oh,
again, in Northern California, that's hard to match.
I didn't know that about Mitsubishi. That's interesting. So, because I was going to ask, was like, when you fix an SBA loan, are you not selling them into the secondary market then?
Then they're just being portfolioed.
For folks outside of that, really low cost of funds, the model is to sell the guarantee. And when you fix the rates and do that, you don't make any money. It's very hard to run a profitable shop. So is the goal of the bank not to make money, to be more of just growing the bank? Like, how does that business model make sense?
Well, not all of the deals are going to be fixed rates. I look at my boss sometimes. I'll give him a variable, he gives me a fix. I give him a variable, he gives me a fix. You give him a couple variables. So ultimately, the bank likes the variable rate deals, for your point exactly, that they're selling the guarantees on the secondary market. I think they just right now want to be a player. Their biggest goal was, we want to rise in the SBA rankings. We want to be the number one SBA lender in California. We want to be in the markets that we serve. We want to be the main guys, and so it's somewhat their way of staying competitive and being able to get into those markets and stay in those markets.
Well, it's working. I think you guys are about 14th in the country, top 15 or top something like that. You're up there.
I think so. Yeah, the last one that came through was, I think, right around there. Yeah.
The 300 million I saw in the first 11 months of the fiscal year, which is very hard to do, and to do it only in a handful of states says a lot. So whatever, it is working, whatever you guys are doing. I don't know about the numbers or the profits, but if that's the mission, it's working. So did the 90% guarantee have anything to do with that? Did you guys change your underwriting when that came into play?
I haven't noticed a huge change in that. I mean, it's mentioned a little bit more. If we're looking at a deal, they always kind of fall back on, well, right now we got a 90% guarantee on it. So, but I'm not seeing, let's say, the quality of deals. It's not like I've changed my focus and I'm going after a little more deals that have a little more hair on them. Same deals are coming through. I think it just kind of helps the underwriters maybe a little bit get more comfortable with them, to be able to say, hey, we got a 90% guarantee on this.
Got it. What about structure wise? Do you do like maybe a more aggressive structure at all with the 90?
I mean, we are a 10% down bank. So any deals we're sticking with the SBA minimums on that one with, 10% down injection. We'll do the 5 and 5 as well. So, 5% from the seller, 5% full, carry from the buyer side.
That's pretty aggressive too. Not everyone does that. A lot of people do, like on a business acquisition, like an 80-10-10 with a seller note, for example. So that's working for you too.
Yeah. I kind of look at it. It's that perfect storm. It's like my pricing is good. I can do fixed. We'll do the bare bones minimum on injection. My bank tends to like education as well. So although maybe you don't have direct industry experience, if you got an MBA, on paper, you should be able to run a business. And so they will take, higher education into play as well when you're looking at that experience factor.
I disagree with that. I think MBAs are stupid and mean nothing, but that's another topic for another podcast. Tell us about your individual go-to-market approach, Scott. Are you dealing with branches? Are you dealing with brokers? Like, what's the mix? How do you go to market?
Primarily brokers. I do have a small branch network that, I pop on deals every once in a while from the branches. Pandemic has made that a little bit more challenging just because you need to be top of mind with branch. You need to be out there. You need to be visiting them. And with the pandemic, you really can't do that. And so even prior to that, primarily it's been brokers. I mean, I have a great group of brokers that I've cultivated over the last, 7 years, and treat them very well, stay in touch with them. And That's where the majority of the deals are coming from.
When you say treat them well, what does that mean?
I look at them, and when I think back on my time as a relationship manager, SBA tends to be a little bit where you do the deal and you're kind of gone. It's not so much of that relationship as I was used to. So I treat my brokers as they're my ongoing relationship. And so, spend a lot of time with brokers, running through deals with them, running through, show me the financials. Where are you looking at pricing this? I've gotten to a level with my brokers where they'll come to me and go, hey, I'm thinking of pricing it here. What do you think? Does this work? And then, ongoing, because again, you do the deal, you move on. The broker's still going to be back around. And so now you're looking for the next deal from the broker. And so, always making sure that, my brokers are well informed. I'm in touch with them. Here's what's going on. Hey, we're struggling with this buyer. He's not moving. What can we do to keep this thing moving? So
are these loan brokers more like, or real estate brokers or business brokers?
Business brokers.
Okay.
Yeah. And in California, and I'm sure every state maybe is a little bit different, the only requirement to be a business broker is you need to have a real estate license, and I mean, I have a real estate license. I don't know if that qualifies me to be a business broker, but per the state of California, I could set out my shingle and start selling businesses. And I think was some of my struggles in the very beginning. When I was a brand new SBA lender, you get a brand new broker, and now both of us don't know what we're doing. And it created some potential conflicts of just stress that maybe isn't there now, because I understand what I'm looking for, and the brokers I deal with now do too.
Yeah, I'm similar. I work a lot with brokers and loan brokers, like mortgage brokers, but also business brokers, and then also bankers. Like that last bank you were at, even your bank. Banks would work with us because we're nationwide non-bank lenders, and then it's outside your footprint. Well, you kind of can still work through us and keep the relationship, that sort of thing. But it's all the same thing. I get your point. It's taking care of them, keeping them informed. And to me, that's fascinating. So you get that. And the reason you're successful is because even though that seems common sense, a lot of people, I don't know the percentage, but in our industry don't do that. They don't communicate. They'll even go around you and like screw you over for a deal. I'm sure probably doesn't happen too often, but I hear it all the time from brokers and like lenders going around them or something like that. But it's short-sightedness at the end of the day, because I think you and me can agree, these brokers are going to be feeding us for life if we take care of them, and they're not worth any one-off deal to screw them over. I mean, it just makes no sense. So you focus a lot of your time on maintaining those relationships, and that's probably a big key to your success. How do you keep track? Do you have like a system to say, hey, I haven't talked to this broker in X amount of time, I need to give them a call? How do you keep track of it all? Or do you have, and how many do you have that you really focus on? Are we talking about 10 or are we talking about 50?
I would say I probably have 20 to 30 that I'm active with, where I've looked at deals for them. There are deals that they have in market right now where, I've done pre-quals for them. And then maybe 500 or so that are on my mailing list, and that was part of the struggle as well in the beginning. How often do you reach out? If you're reaching out every 2 weeks, it becomes annoying, and now all of a sudden they start unsubscribing and they're that. But if it's every 2 months, is that not, now have you missed opportunities? And so with the bigger group, I'm probably reaching out to them every 4 to 6 weeks, where you're doing a little bit of a drip, just kind of keeping my name out there, keeping the bank's name out there. On the, the brokers where I've touched them more frequently or done a pre-qual for them, that is every 2 weeks. I just have it on my Outlook calendar every Monday morning. I go in there, look at the deals. Hey, we haven't talked, in a couple, any movement on this one, anything changing, any updates for me. And on those, I've never had a broker be like, you're annoying me. They're like, hey, thanks for reaching out. I appreciate it. And so it kind of feels like I found that right amount to do.
Yeah, no, that makes sense, because you do a pre-qual. These businesses can be on the market for quite some time. And even before they get to market, the broker's working with them for several months. And so to sit there and just wait for them to call you in 4 months kind of seems lazy. So you're, I think, taking the right approach there. That's a good lesson for people to take away. So do you think with this whole broker network that it is loyalty based, meaning these are your relationships, they're going to bring it to you? Or do you think it's more like product based, meaning they're using you because of your product? You know what I'm saying?
Yeah, I would say, and I've thought about this as well, because sometimes you do take it personally, where all of a sudden a deal will pop up, and you're like, "Hey, what? Wait, how come I didn't get that?" And because I'll see things pop up on LinkedIn, and I know that deal, I pre-qualified that deal, and it for some reason it didn't go through. I would say some of the brokers, well, I have a good relationship with it. They're going to come to me first. They're at least going to give me a shot at it first. And then other brokers, it's more product. It's like, hey, this deal's already been declined at this bank. How does your bank look at it? And, going from there. So, I mean, maybe 50-50,
Same with me. And half the brokers, I'm their guy. And the other half, maybe whoever talked to them last, they'll send it to, which is why following up is good. But
right.
It's just not as loyal, which if we could find a way to go out of our way to cultivate those relationships a little more closely, maybe we can both improve on that. But I just think it has trended more in that direction where you have to have a product and you have to execute. They're not going to use you just because you've been golfing with them for the last 15 years. If your structures aren't as aggressive and you take too long, or your rate's not the best, like it maybe when I started out, it was more like that, but now you've got to really have the goods.
Well, yeah, I mean, because they want to close deals. They don't get paid until they close deals. And so you can be the best buddy in the world. And we do pay referral fees. And so a round of golf doesn't come anywhere near the check I'm going to write them, when the deal closes. And so I think some of that plays into it as well.
And you pay referral fees?
We pay referral fees. We do cap at 20,000. Our cap is 20,000, but on most of my deals, this year I've hit that cap a couple of times with brokers, and but still, I mean, you're writing them a check for 20 grand, and they're still getting paid, and that doesn't, a round of golf doesn't kind of live up to a $20,000 check.
Yeah, that is no, that is solid for you to be able to pay a referral fee and get the pricing and the structure. So you've got all that working for you. What's your biggest challenge right now?
Volume. The volume right now is capacity is just crushing. I mean, I was probably one of the more active BDOs, and spreadsheets. I can't keep a track of who my processors are. The borrower sends something in. I'm like, I got to go to the spreadsheet and go, okay, who's my borrower? Who's the processor on this one? Who was the underwriter on this deal? Just kind of keeping track of that, as well as our back shop. The volume that they're putting up on a monthly basis, and it's never ending. And I feel for them, because you can get frustrated with them. There's times where I'm like, dude, I sent this to you a week ago. We can't let everything go a week. But then you got to be ginger with them, because I got 3 more deals with them. And so you can't necessarily just chew them up and spin them back out, because the next deal comes along and they're like, dude, we don't want to work with him anymore. He was mean. He was nasty. And some of my fellow BDOs kind of have developed those reputations. And I understand being frustrated, but you can't take it out on your processors who are doing the best they can under the situation. And so, as well as hiring is hard. How do you train somebody remotely? I mean, that just seems almost impossible.
Yeah, these are all the things we've been talking about, especially, at the Flagel conference that I was just at. I mean, what you just said with dealing with your internal partners is something that I've been paying really close attention to. And we actually created a breakout session for it at this last conference, where it's called Communicating with Your Internal Partners. And it was for BDOs. And we brought down a national sales manager, and he's also a producer at a small bank that does probably top 35 lender. And I'm sitting there and I'm moderating the session and I'm reading his bio and I'm like, all right, this is, I don't know if he wants to be named, so I'm just going to not name him, but this is this person. And it says here he's done in the last 12 months, 75 million of its own production. Wait, and I stopped, I'm like, is this right? So you've done 75 million in the last 12 months yourself, and then your team's done another 100 something million who you manage, like another 3 or something BDOs. And he went into detail on how he manages those internal relationships. And it is to the point where I'm like, you're insane. Like it's almost like his main primary function is to know everything about his internal team and to figure out how to basically manage those relationships and not step on any toes and like be really kind of psychological about it. And everyone's different, like every closer is different, and you have to handle all of those different personalities in different ways. But you're absolutely right. So just the fact that you're cognizant about it is, that's what separates you from the other folks, like you said. Because when you blow up at a closer because they should have looked at this 2 weeks ago, you're shooting yourself in the foot. How is that going to improve? Like even from a selfish standpoint, doing that is not going to help me in my production. So how do you do it? So, hey, we're supposed to close next week. And they're saying, well, these insurances are wrong, or maybe it's something even bigger than that. And you have to go correct them. And you're supposed to close next Tuesday. And you're saying, this is wrong. And they're going to say, well, we sent that to you a week and a half ago. What is the right thing to do there as the BDO?
I think what I try and do is remember we're all in the same team. We're all in the same team. Our goal is exactly the same, is to get deals through the system, have happy borrowers, close deals. And there are times, to your point, where it has been me making a mistake and I'm like, oh, I missed that email. Oh, I missed that. Oh, I only read, I'm the stereotypical BDO. I read the first 3 sentences of an email and I move on to the next thing. And so, hey, that was down in the lower paragraph. You asked me for that. Oh, so I think I try and, cut them some slack, hoping that, again, there's times where they need to cut me some slack, especially in the beginning when I was newer. But again, remembering we're all on the same team and everybody makes mistakes. And again, if I lit you up, does that help you with the next 2-3 deals that are coming down the way to you? No, it's human nature. They got a stack of deals on their desk and they hate me. Whose deal do you think is going to get pushed back down to the bottom of the stack as they keep going through the stack? That's just human nature. And so I think there's times where, I'll hang up the phone or the email and be so mad, and you walk away, come back and go, okay, we're good. It's better.
Yeah. I don't know what it is, but it just because everyone makes mistakes, but for some reason, it's just, I think when you get closer to closing, people just get more tense because you're like, all right, this is as the borrower, this is getting real. I am about to take over a business next week. I've got employees now. I've got payroll. And you're telling me, this, because here's my thing, and tell me if I'm wrong or right, but it's all about setting expectations. If you say up front, something will happen in closing that's unexpected and we'll deal with it. This is not you set the table to let them know what's going to happen, or what do you say at the beginning of closing to get the borrower ready for the closing, which is that's when the rubber meets the road.
I work through the way my bank does it. We have a needs list. When you get through that needs list and everything has to be in, then we go to final approval, we go to docs, and then we go out with that. And so, what I found, especially as we've gotten more and more busy, is I'm much more involved in those needs lists than I was a year ago. Before, you used to be able to bring the deal and hand it off, processor jumped on it. My involvement, then I popped back into the deal and smiled and, took it from there and we closed it. Now the volume is so high that if I had to wait for them to be clicking things off of the needs list, it's just not going to happen. They're just too busy. And so I've taken into my thing to be able to say, hey, this is my deal. I need to follow this thing. So I'm checking things off the needs list. I'm sending borrowers out updated needs lists. Normally that would have been all handled by the processors. But again, the point is to get the deal done. And so if it's going to take them, they can look at my deal once a week. Well, that's not fast enough. And so again, my job is to get deals closed. And so I got to stay on my deals much more than I had to, a year and a half ago.
Do you find that's working, or do you find that it's complicating things because there's too many cooks in the kitchen?
I think it's working because it makes me know my deals that much more, and everything I do, I get better at it. And so you learn from each deal, you learn. And so now when they're asking for things, I can be more a little preemptive, going, hey, I think we're going to have a problem here. Hey, I think, what about this? Oh, I saw this come in. That's going to be an issue. And I think to your point, you're setting the expectations for the buyer, going, hey, here's what's going on. Here's where we're going to run into trouble. If we're asking for life insurance, you better get on that right away, because it's going to take X amount of time for that to happen. Don't do that at the very end. As well as, at least out here in the West, appraisals are taking 4 to 5 weeks right now for real estate. We better get those ordered quickly, and you've got a little time to work on these things, but we got to get those things going.
I should probably know this, but do you guys use SBA closing attorneys out there?
Right now we are, just for the sheer volume. We've got attorneys that are handling our doc prep because we just can't keep up with it internally. And so, yeah, we've got attorneys that are doing that. And that adds another layer of, these guys don't know the deal. And so they're just getting sent paperwork. And when the loan comes back, there is always some tweaking that needs to be done. Something is wrong here. And again, that adds, although faster than we could do it without them, it still adds a little bit of uncertainty when it comes to timing, because you just don't know how messed up are the docs going to be when they come back. Some are better than others, and some are a mess.
Well, that's standard here in the East. We do that. We all do that here on every deal, use attorneys. But the West is just so different. And I experienced that when I was at my last shop at ReadyCap, because we ended up bringing on some West Coast people. And initially, because I was there pretty early on, and so we brought on a couple guys out West, and they were running our closings through New Jersey, where we're headquartered, and it was just like not working out. And we ended up bringing in some more West Coast processor teams, which we have here. We have a few closers, and they call themselves processors out West. They do that here too. We have closers, but our closers in California refer to themselves as processors. I don't know. That must be a West Coast thing. But they were.
And technically, we consider them loan admins. And so I'm like, but a borrower, what's a loan admin? They're a processor. They're the closer. I mean, they're the same person all the way through. But again, you call them LAs, and they're like, what's an LA? Well, it's a loan admin. And so, yeah, I'm with you.
I've never heard loan admin, but we have a few that are in California who were at the Money Store, which was an SBA lender back in the day that cranked it out. And so they have deep roots in SBA, and they're processors. So I'll call them whatever they want as long as they get the loans closed. But
you got it.
I'll leave you with this, but West Coast, so different, so much more competitive. Is it? I mean, I'm in Florida. It's competitive. Now I am competing on almost every deal, which is, to me, crazy. Not used to that at all. How do you compete on most of your deals? How many folks are like, almost seems like bidding on the loan, which you would hate to get into like a bidding war or anything like that, though it sounds like you might win. But how competitive is it out there?
I would say it's pretty competitive. I don't know. There's a couple of times where, who can give you the best deal, and it's going to keep going down and down and down until you hit a certain point, and I'm now tapped out. Most deals they don't lose over price, but every once in a while a bank will pop on something, and I'm like, and I'll be honest with the borrower, you got to take it. I can't even come anywhere near this, and I'm the low price leader. But again, I don't know if you got a BDO who really needs to keep a job, and they'll pop on a rate where I'm like, you're, 75 basis points below, and I'm really low, and they're 75 below me. So I would say it's pretty competitive. Normally, when you can go fixed, you're gonna win the deal almost every time. And I don't have much competition out there for fixed. US Bank will go fixed with me. They're probably my biggest competition out here in the West is US Bank. Surprisingly enough, they just bought us, and so that will be a whole US Bank just bought Union Bank, and so that'll be a whole new
when will that happen, like next year or something?
Yeah, they're anticipating that the merger will be completed in April, May of next year. We'll still run as two separate banks until conversion, and then conversion should be towards the end of 2022. Our SBA shop, I believe, is bigger than theirs.
Really?
So I don't know. My hope is they're not going to acclimate us into their system, that they're going to take the whole SBA product and say, wow, you guys are doing it really well. We're going to take a page from your book and let's continue to run it the way you do it. So I don't know.
Well, the CEO of US Bank is a huge fan of the podcast, so he's hearing this. So I'm just kidding.
And again, obviously I'm not in those high level meetings. They've not invited me to be a part of that, but I just know, I think the lady who runs in my SBA department and my boss, they're very well thought of. And, I hope that there's some feedback back and forth to say, hey, this is what we do. This is why we're successful at it. Let's use some of what we do.
Yeah.
So
it'll be interesting to see, because we're seeing a lot of those mergers here, and I'm seeing same thing, like who was it? PNC just bought a bank. I forget who. They both had an SBA division. PNC, I think, basically the other bank, which I think was BBVA, folded into PNC.
I think you're right.
And that didn't go well. Hopefully yours goes better than that one, but it's always interesting to see.
I hope so as well, because I'm like, dude, I found my home. I was going to stay here for forever, and then all of a sudden it gets announced that US Bank takes over, and I'm like, well, I don't want to go look for another job, but you'll just have to see how it goes. Luckily, I think for us is we have a transferable skill, and so now it's just a matter of hey, either they're doing what you do, or transition a little bit, or you got to go find a new home.
The good news is you, as a producing BDO, should have the they'll want to keep you, and it'll just be up to you. And I think they'll recognize that and understand, but that's the SBA industry. People bounce around, things happen, and that's just par for the course. So we'll see what happens, man. But hey, I really appreciate you hopping on and imparting some words of wisdom to the audience, man. Thank you.
I appreciate it, Ray. No, this is fun stuff. So, I mean, whenever I get a chance to talk SBA, I love thinking about it, talking about it. And it's just, when you find your niche, I'm like, I wish I could have been in this 20 years ago. Just didn't know it existed.
Yeah, absolutely. All right, man. I'll talk to you later. See ya.
Awesome. Thanks, Ray.